Good morning, traders. This is Michael coming to you from Gamma Edge on Thursday, October 2nd with our pre-market prep session. Thank you, everybody, for joining us this morning. Again, make sure you like and subscribe on X as well as YouTube. You'll be notified when we go live with content, as well as our extensive posting on X about the JPM hedge, as well as individual equities, our mechanical portfolios, all on X. So make sure you're checking that out. All right, we're going to jump right into it. As always, here at Gamma Edge, we cover our three pillars: sentiment, structure, and trend. Currently looking at our market trend model that we posted yesterday. This is based on the tick index. You can research that at your favorite investing website, but the quick orientation is the bolded white CT is the intraday instantaneous cumulative tick. And we put some momentum moving averages on here just to get an idea of the trend that is occurring within the overall market. Obviously, if this is from lower left to upper right, that is indicating more buying versus selling in the overall market. And this colored ribbon, which we'll look at on our quality tick here in just a minute, basically gives us a longer look back period, and that's how we position our money for the longer term trend in the overall market. So we'd like to see this bolded white CT cumulative tick start emerging above the colored ribbon, again indicating that we could be moving into a longer term uptrend. And we'll look at the tick RC, which was what we base our mechanical portfolio on, is already moving back through the colored ribbon and turning our mechanical portfolios on. New highs versus new lows up here in this panel. New highs outpacing new lows, so breadth was good yesterday. Filtered cumulative tick indicator plus 1,000 minus 1,000 larger institutional orders. Obviously, you want this above zero, moving to the upside, indicating institutions are buying versus selling, as we saw really the previous 3 to 4 days. We're down. We had a couple extensive selling days, and then now we're recovering back to the upside. All right, let's move on to the tick RC. This is our quality tick. Again, emerging outside of our colored ribbon above the red. This is indicating our mechanical portfolios are on, including our wheel strategy, as well as our P-Trans to PGEX portfolio. And we posted last night the positions we'll be entering today mechanically. If you want to know anything else about our mechanical portfolios, you can check those out at gammaedge.us. We have a blog, extensive content, as well as search our post on X. We've posted the back testing as well as the forward testing and the returns that we've already seen for this year. So again, mechanical portfolio is on, lower left to upper right. We want to see this tick continue to the upside, indicating there's more buying versus selling in the overall market. And being on the right side of the market is 50 to 75% of the objective of the market trend model. All right, let's move on to the SPX options complex. We separate the SPX-A from the SPX-P. This is AM expiries versus PM expiries. The AM expiries are larger institutional money. We call those our cruise ships or tankers. Again, call dominated above and below spot price. This is for the October expiry. You'll notice the transition levels below us. We've been discussing this extensively about being above the transition levels, and this continued to be supportive as long as we're above those levels, again in a more call-dominated positive gamma environment. You also know PGEX has moved up towards 6,800, so we do have significant speculation continuing to the upside. Larger gradient at 6,750, that would be a first stalling area we'd watch, and then 6,700 should continue to be supportive, even though we may just oscillate around it and even pull back to the transition area. So all systems go on the SPX-A, which is institutional positioning into the October expiry, as well as on out in time via our web app. All right, let's move on to the SPX-P. Again, PM expiries. These contracts turn over much more rapidly, as you'll notice by our web app and our tiles over here. So these include 0 DTEs. You can click these tiles on and include as many as you like. So if you want to do weekly versus monthly or 0 DTE, that allows us to quickly do that. You'll notice that today we have a significant amount of GEX expiration heading into today, so we'll continue to watch that. Call dominated above and below spot price. So again, we continue to be in a supportive type fashion for positive gamma with the overall SPX option structure. Staying above transition will be important. Again, 6,750 to the upside is PGEX. You'll notice COI is actually 6,700. We'd like to see that advance to the upside towards 6,750. So let us know that the highest call speculation, highest call open interest is much higher. But again, we do have an opportunity to move up towards 6,750. We'd anticipate some stalling around that for a couple key factors that we'll go over here in just a few minutes. All right, let's move on to the SPX-P GEX ratio. I discussed this yesterday. We were right at that one level that was giving an edge to the bulls. But if we wanted to see the price appreciation, we'd have to see short dated call gamma coming into the overall market. That's out of the money call speculation. So again, this is basically a put call ratio, but we add a gamma component, or sorry, a time component, which is gamma. indicating short dated call gamma versus put gamma. And obviously, if you have significantly more call gamma coming in, that changes your ratio to the upside and increases the overall ratio. So again, SPX with spot price up, GEX ratio up, indicating that there is a confluence of the short dated call speculation and spot price moving to the upside. Now, we are historically reaching that 2 level, which is an area where we can see some stalling, consolidation, and possible pullback. You see some other peaks over here, 2.4, 2.18, and 2.11, and this previous was 1.7 here. So we'll watch this. We could be hitting a little bit of extreme. So what will occur, or what the anticipation would be, we'd see SPX going sideways. We'd see those out of the money call speculators taking profit as they're now in the money with the gap up this morning. So we could see some consolidation or even pull back to transition. That would be normal within the overall uptrend. And then we'd see GEX ratio fall as the out of the money calls start to drop, as long as we don't see significant out of the money put hedging, which we did not see over here within these GEX ratios. Then we'd just see a normal pullback within a longer term uptrend. And of course, we'll be watching our market trend model as well as our intraday volume metrics to see where the mass or volume of market participants are transacting overall options. Are they transacting lower via out of the money put hedging, or transacting higher via out of the money calls, or are we in a consolidation type pattern via our intraday tools? All right, let's move on to the SPXP delta balance. As always, all of our charts here at Gamma Edge are interactive. You can scroll over and zoom in. I discussed yesterday about the falling right-hand plane. So we separate this from the right-hand plane and left-hand plane. So right-hand plane is above spot price. That's the full SPX structure above the spot price at the moment. So that is indicating out of the money call speculation. We were dropping below 0. I said yesterday we would need to see this recover on out in time. We also saw weakness in the further expiries. This has repaired itself significantly also. So we'll continue to watch this. This is again just projecting where market participants are positioning, obviously positioning bullish now and reducing some of that weakness that we were viewing yesterday. So right-hand plane, positive slope, out of the money call speculation coming in. We'd like to see this continue to drive higher. Left-hand plane, these are in the money calls, and out of the money put hedging is falling. So again, we'd like to see this at least stay above the 0.5 or at least above 0, indicating obviously that's bullish. And then the delta balance, our blue dotted line, is the aggregate of these two. Pegged at 1 is indicating full bull or full call speculation to the upside. So again, not really anticipating a significant market pullback. Again, just ebbs and flows, pullback to transition, as I've really been discussing in the morning pre-market preps. Make sure you go back and review those. That in a call-dominated structure, pull back to key gamma delta levels, which are most likely transition or PGEX, or transition, positive transition, or 0 GEX, is really an opportunity to get involved to the upside. And we saw that yesterday. We'll review that SPX chart. We pulled right back towards transition, held that level, and then via our SPX game plan, which is much more in-depth for our members, we were talking about the possibility of going long at transition for a significant upside move. And then once we got above drunken sailor range, we really took off to the upside. So the net stack command, this is high sensitivity levels for today. So again, we'll take the delta line. We'll just separate all of these Greeks. Delta line, in the money calls, out of the money calls. As you see, that matches our overall tools. Call dominated, so any pullback to 6,700, as long as we stay above that, will continue to be supportive. And then to the upside, we see 6,740. That's that out of the money call speculation area that we might see some stalling. Net charm, out of the money puts, those will continue to be supportive at 6,700 as long as we're above that level. And you see those out of the money calls, we have significant out of the money call speculation overhead. That is good as in a call speculation for delta, but also can be an overall headwind for charm as long as we stay below that 67.65. Could dampen the price appreciation for a significant move past that. Net gamma, obviously this is your fuel to the fire as we cross those high sensitivity points. So 67.65 is a pretty far hurdle today, not anticipating us to cross that. As long as we stay above 67.20, will continue to be supportive. If we start losing 67.20s, we could see some of that delta start coming off and unwinding, so that would be a pullback down towards 6,700. And you see Vanna, if we do see volatility continue to drop, we'll continue to watch these high sensitivity levels there. All right, moving on to the SPXP 0 DTE. I already posted this morning, but call dominated above and below spot price. Significant positive net GEX. So again, that just reinforces your call dominated gamma condition. Drunken sailor range fairly narrow today, which is good. The transition areas are very narrow. Also, the if-thens make this very good trading. Any pullback to this level is an opportunity to get involved to the upside. If you're within DS, can be slightly choppy. We would not anticipate us going below 66.80 or the bottom of DS. Again, unless we see a global sentiment structure as well as a market trend model shift, which could happen intraday, but really not anticipating or expecting it. So any pullback to transition or the bottom of drunken sailor range, we'd be looking to get long the overall market. And above drunken sailor range, obviously the speculations to the upside. Your first gradient is 67.40, next gradient 67.50, and then ultimately we see PGX COI up here that matches our COTMC, which is a proprietary gamma edge level. That's where out of the money calls go in the money, and historically we see monetization into that overhead area. So again, the upside pushing the rock up the hill may be slightly difficult because of charm overhead if we're under these key levels. But again, 67, 65, 67.40, 67.50, and 65 would be those areas for stalling that we'd watch. Again, opportunistic if you want to look for a short back down towards the top of the drunken sailor range, but in a call dominated environment with the market trend model in a linear up fashion is very difficult to short. So we'd preferably not do that. We'd just be looking for the long side or playing spreads if we see some sort of stalling into this overhead and not indicating out of the money speculation as well as volume moving to the upside. That's an opportunity to put on some sort of option structure, including a spread that would take advantage of the market not going above these key levels overhead. All right, let's move on to our trading view chart. For this morning, I've already overlaid our key gamma delta levels. So you see transition here. I've overlaid our drunken sailor range as well as our 0 DT transition levels here. So as long as we stay above the drunken sailor range, we didn't indicate that that most likely would be supportive. If we pull back down towards 0 DT transition, 6,700 here, and then we have full expiry transitions below us. Again, all these levels will continue to be supportive, as well as COTMP. That's where out of the money puts go in the money. And historically, in a call dominated positive gamma structure, we continue to see this to be supportive, as well as 0 GEX and the bottom of drunken sailor range. So the takeaway is we have significant levels of support below us, even if we unwind some of that delta down into the drunken sailor range or even into the 0 DT transition area. Most likely these will continue to be supportive. Moving on to some of our single stocks here. Again, significant move up yesterday in all of the single stocks. Just almost pushing up towards a plus GEX level. We have a mechanical portfolio that takes advantage of a move from P-Trans to plus GEX. So historically, plus GEX is an area where we can see some stalling, again, unless we see a significant shift to the upside and out of the money speculation. So we'll continue to watch those overall structures advance or not advance. Again, that will give us an indication if the market is wanting to move further to the upside. Again, Tesla very strong, also NVIDIA, Meta. Meta is slightly weak. We posted that yesterday. Individual equities, how we look at call dominated versus put dominated structure. Meta was the call dominated structure, and Meta was the put dominated structure. PLTR was the call dominated structure. So in an overall call dominated positive gamma environment, you want to look for those stocks that are call dominated, indicating that market participants are speculating to the upside, and not really you want to be in put dominated stocks. Obviously that would be showing more weakness. So with that, I'll send it out to the floor for questions or comments or individual equities if anybody wants to go over that. Deval, I think I answered that. You can check our blog. Again, come join us at gameedge.us. Put your name in for the newsletters here. You'll be delivered this content on the weekends. The free courses here, Game Edge Fast Pass. This goes over all of our theology, all of our thesis, and all of our tools. Sign up for that. All of this is free, and then click on the pricing tab. This takes us to our Discord portal that you can join. Again, 14-day free trial. Come check out the mechanical portfolios. I think you'll be amazed at the back testing and forward testing, as well as the wheel strategy. We're beating the SPX and SPY buy and hold by a significant margin. Just even with a mechanical portfolio, for people that are working 9-to-5 jobs, you place market on open orders every day after looking at the scans in the evening. That's posted. I am personally trading this portfolio as well as the rest of the Game Edge team with real money, and we post all of our P&L and all of our brokerage stuff also. So make sure you come check that out. All right, let's jump into some single stocks for everybody. We'll check out Amazon. Amazon call dominated above and below spot price. So I'll give you a quick of how I structurally look at this. First, I look at the gamma condition. Next, I look at where transition is at. Is spot price above or below transition? The next thing I look at is where PGEX and COI are at, as well as INGEX and POI. So INGEX and POI are down here. So we're above transition. We're call dominated. PGEX is 225, so that would be that first stalling area. COI is 250, so we have a significant amount of upside speculation. And then I use our web app. I go to single expiries, especially for this Friday, PGEX COI 225. You would like to see that continue to advance after the next expiry. Not saying to be long here, or not saying to not be long Amazon, but your upside may be capped in the 225 to 227.50 range. The reason is you want to see a significant amount more of out of the money call speculation come in. If more out of the money call speculation comes in, that drives the structure higher. PGEX and COI is a function of that SPX, or sorry, of that option structure of options speculation into the structure. So then we move on to the next expiry. That's what makes our web app so easy to use, is that you can just watch this. If you're in a swing trade, you can just click through these expiries and see if the structure advances or stays stagnant. Amazon, you'll notice the difference here. It actually advances up to 230. So again, that's great. After this Friday, the speculation continues to the upside, so you stay with the swing trade on Amazon unless it violates any of your rules. But upside 230 looks good on Amazon for next Friday. Speculation is there. Where the market cooperates is another thing to watch. Market trend model. So D-Pro, I'm gonna say that's probably not OI. Yeah. So we have to have a minimum OI of 100,000. That's options. That's the volume of options. That helps us look at the overall structure, the dealer hedging metrics on stocks that don't have that much open interest. Doesn't necessarily lean towards us using our tools to look at the speculation of market participants. So that's why, and we obviously don't trade those low-priced, low OI stocks. I'm not sure what the actual share volume on D-Pro is. I'm not really familiar with that ticker. So that's the reason it's not in our universe. Now, we do add tickers from members that if there's some that are not in our universe and it meets our 100,000 OI threshold filter that we already have, then we'll certainly add it to our universe for our members. So let's look at a firm systematically. We'll go through exactly what we did with Amazon. Call dominated above and below spot price. Where spot price is to transition, above transition. We look at where PGEX COI is. So PGEX is 74, COI is 80. I like to look up and down the net delta column to see if it's green all the way up, but we do have some puts above us here or possible short calls there. With the negative net delta sign. So that's interesting there. Again, COTMC here at 80. So we do have possible upside appreciation with the highest call open interest, but I'd like to see PGEX moving up also and that structure continuing to advance. So we'll look at single expiry, PGEX COI up there on single expiries all the way up to 92. I think that's probably a far lift. You look at the expected move, it's only 5 points over here, 6.36%. So that basically puts you at 80. So that would be the upside target there. Next expiry, we actually see the structure drop. So that's a little bit weaker as you see PGEX and COI come down to 75 and where spot price is now. So heading into this Friday, we do have some speculation to the upside, but I would like to see that structure continue to advance expiry over expiry if you're going to stay with a swing trade, not really looking like it's advancing expiry over expiry on a firm. So. All right. Anything else, everybody? Again, like and subscribe on X or YouTube. You'll be notified when we go live, midday market recap, as well as the post-market. We go over how we navigated the structure in SPX for the day, how we use our SPX game plan and our tools to look for trades throughout the day. So, all right. Thanks, everybody. Everybody make it a great day. Again, and we'll be watching for pullbacks to key gamma delta levels for opportunities to get involved as we continue to see the SPX options or SPX spot price appreciate. up towards that plus Gex ultimate target 67.50. Remember, we have significant out of the money calls overhead, and we're below those gradients. That charm could provide a headwind for the day. So thanks everybody. Make it a great day.